Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 3rd, 2016. This week we'll look at some of the subjects that are listed here. We'll look at stocks, junk bonds, investment grade bonds. Um, uh, Also, we'll look at the dollar, and it is affecting some of the previously mentioned asset classes. Of course, we'll look at gold, oil, and natural gas, and we'll finish off with the agricultural commodities, which are showing some relative strength and possible breakout. Okay, so let's start today. We're looking at a very long-term picture, and this is S&P 500 going back to 1970s. I removed the price itself and I left the 50-day and the 200-day moving average in place. Up here in the upper part here is my proprietary market breadth index, which attempts to call either the bull or the bear markets. So when the market breadth index drops below this red line, we're starting a bear market, and vice versa. When we get a surge above the blue line here, we get a bull market. Now it's not perfect, but nothing is really perfect, but it did call the previous markets relatively well. And the most important thing, I think it helps to avoid some of the whipsaws, some of the false trend changes. For example, the ones here in 2010 and 2011 were truly not bear markets, they were mere corrections. Now, here in last year we had an entry into the bear market. Actually, let me go to the next chart, which zooms in closer to the a little bit more. So here we had according to this system, we had the entry into the bear market back in 2015, and since then we actually had some decent drops, but then equally strong rally. And in fact, right now this index actually flipped back into the bull mode. So as of right now, I'm guessing I'm switching my posture again, and now I'm looking at the markets as from a bullish point of view. So it's anything is possible in the markets, and they will do whatever the markets will do whatever they like to do. But to get some sort of a clarity, I use this system, and it helps me to at least determine whether I should be buying or selling. And up to now, I was looking at shorting opportunities. In fact, I'll show you in the next few charts. I'll show that we went ahead and did take some shorting opportunities in December of last year. But it seems that right now looks like the picture has indeed changed. And once again, I'm not married to the bullish or the bearish side, but I am looking at the balance of evidence. And I think at this point of the game, the balance of evidence has indeed shifted to the bullish side. Further down here is another interesting piece of the puzzle. This is a raw MBI, which is a one of the inputs for the market breadth index, and we did have prolonged bear markets here in 2000 and 2008, and this raw MBI did become oversold. You can see it here, it became oversold. Actually, in 2009 it went all the way down to zero. So here we did not really become oversold, which is kind of bottomed out around 28 area. Here we went below the 20 area. So maybe that was it. Right now we have just incredible intervention in the markets by the central banks of all countries pretty much. So maybe possibly they have succeeded in preventing this market from occurring, through this bear market from occurring. We will see, and time will tell. This is S&P 500 ETF SPY. So to put this thing in perspective, these are 52-week lows here in just January of this year, and now these are 52-week highs. just in April of this year. And then we again hit all-time, or rather, these are all-time highs, and then we again hit all-time highs here just on Thursday. So you can see the difficulties people are having, and pretty much everybody's been having a hard time, especially trend-following systems. They get whipsawed by this incredibly powerful moves. And then again, to put this into perspective, I wanted to show an infographic from Sivako Capital. Chris Sivako, he's a very good analyst, and this is a video that he published in April of this year. And this infographic really shows what kind of just incredibly unprecedented environment we had for the past few years, really. So you can see here from March 2013, this is the longest and the sharpest rally in the 65 years. Then this chop around here from 2015 is never seen in the history of Dow. Another incredible drop here in August, once in a 75-year event, and then pretty strong rally, and then the first 10 days of this year was the worst 10-day start in the history of the entire stock market, and then an equally powerful rally, which was once in 90 years powerful rally that we had of the February low. So this just shows how hard it is to make money in the markets right now. The environment is incredibly difficult. Anyways, on this chart, I think that this support has been reaffirmed in the 202, 203 area, because we had hit all-time high and then kind of came down from the all-time highs. And the important thing is we closed below the 50-day moving average here, and I was like, okay, maybe the bears have a chance. But this looks like a hammer candlestick, and basically this support was reaffirmed and we rallied to all-time highs. So the way I'm looking at it right now, I'm basically thinking that this is going to be, maybe we'll pull back slightly, maybe we'll go sideways, but I think the direction is most likely going to be up. And here is one interesting piece of a puzzle. On Friday here, this was a really worse than expected unemployment report, and look what happened. Nothing really happened. We dropped 0.3%. So even though we had really not a very good report, stocks kind of shrugged it off, and this is a sign that stocks did not drop, or sometimes they actually rallied on really terrible news. That's a sign that most likely they will continue higher. This is S&P 500 itself, the index without the dividends. So this also shows the market breadth index, and looks like we entered the market bearish territory of the market, or this kind of changes the posture. Basically, I'm looking for shorting opportunities within the market, and the subscribers, we did take an opportunity here, and so we rode this entire leg down. But this rally was extremely rare event. Like I just showed, this was a once in a 90-year event. After making a 2-year low, basically came up to basically all-time highs here again. So very rare, unusual events, most likely due to interference from the central bankers. And here again is the market breadth index going back into the bullish territory. This is just a weekly chart of S&P 500. Again, 2-year low. We did not make a all-time high without the dividends just yet, but this week was basically flat. Maybe we'll get a little bit of a pullback, but I would be looking to basically re-enter the market on the long side now. Unless we get some sort of a just complete collapse and then the market basically switches back into the bearish territory. This is the same thing, the S&P 500 without the dividends. So far we did not make a fresh all-time high, but we were able to break above this level here. This was at 210.04. Now we're at 210.20. So we were able to close above this level, and I drew in this trend line between this peak, and looks like we were able to close above that peak as well. So again, we possibly might get a slight pullback, but maybe the bearish case is really going to be difficult to prove now. Anything is possible. Again, we have to keep an open mind on the possibilities both ways. Maybe Brexit, which is coming up in June in June 23rd, will affect the market, or rather, I would say that definitely it will affect the markets. Also, we have a Federal Reserve meeting this month, and who knows, maybe Janet Yellen will decide to go ahead and raise the interest rates after all. So maybe that will weigh on the markets as well. We'll see. This is JNK, the high yield bond ETF, which holds high yield corporate bonds. So I pointed out this couple of last months actually about the junk bonds being quite resilient. Here we had a gap down and a continuation lower, but really there was no follow through, so the bears kind of gave up, and that was another tell for the bearish case to be less and less likely, and then we broke out above this high. So another piece of the puzzle for the stock market. Junk bonds in general they correlate highly to the stock market. So, for example, here we have Vanguard High Yield Corporate Bond Fund, because the JNK actually only started around here in 2006, 2007, so there's not a lot of history. But this fund correlates to the S&P 500 quite strongly. So even though there are some forays into the negative territory in this business of stock market predictions, the correlation, this is quite a high correlation. So to me, this looks like we are going to continue higher, both in the junk bond universe and possibly in the stock market universe. So bonds, Treasury bonds today really broke out strongly. Look at this gap, very large gap up, continuation higher. The gap was held throughout the day, and actually close was next to the close was at the high of the day. This could be already a breakout. We're getting close to all-time highs here. So here we had a pretty nasty looking candlestick, and my subscribers, we actually have bonds open right now, position open. So I was very worried about this bearish looking candle, but looks like we held support, even though this was a really ugly looking candle, and then we kind of held support, continued. We can see we already broke out here and then continued higher. So this is certainly a bullish looking chart, and performance-wise, again, in the top 10% of all stock and bond ETFs. So very bullish looking chart. Here's a TLT on a longer term time frame. This is a weekly chart. Very, this is a Maribosu candlestick, basically, where high and low correspond to open and close. So we're again approaching all-time highs, and I pointed out this possible cup and handle formation, and this is a giant cup and handle, 20% depth of the pattern. So if we break out, we could continue really significantly higher. And you know, they're saying that no, negative interest rates cannot happen in the United States. It happened in other places. Japan and Germany and some of the Nordic countries have negative interest rates, so I don't see why it cannot happen in America. AGG, aggregate bond fund ETF, all-time highs already. Massive gap up here on the heels of poor jobs report. I'm guessing that bonds are pricing in the fact that Janet Yellen will be more reluctant to raise interest rates in a few weeks. Again, all-time highs here. So now this depth of pattern was about 3.4%, so let's go ahead and actually measure it right now, see where we're at. It's about 3.5%. Breakout here, we're about 2.3%, so we still have about 1% at least before the target for this particular pattern is at hand. So the bonds have quite a bit of room to run to the upside still. So one place where the poor jobs report was felt, I think one of the strongest ways, of course, in the currency universe, and the US dollar index lost pretty much against all major currencies, lost about 1.61% in just one day. And if you look on some of the minute charts, you could see it was just an enormous drop in 1 minute. We're basically back at the support level here, around 93, 94. So we'll see if we hold there or not. I mean, we held here several times in the past. We did break below it. So again, I'm not sure if it is a support break or a bear trap. Possibly it's a bear trap, but now we could be in for major support. If dollar holds here and rallies, then we could see renewed pressure on commodities. But for now, this is another US dollar longer-term chart. You know, kind of longer-term perspective. We had a breakout here in 2014, continuation to 52-week highs, and sort of a cup and handle formation. So we're back to the bottom of this pattern, and certainly a break below this pattern around 92, especially around below 92.52, we could easily see collapse down to around 86 level. Okay, of course the dollar lost, gold rallied. This makes perfect sense because dollar, or the gold is priced in dollars. So if the dollar gets cheaper, gold seems to be more expensive. Really enormous looking candle. On the chart of GLD, I'll show it in a little bit. There is an enormous gap here. You know, it's difficult to trade this. This is a very large candle, but in my experience, these large candles usually get retested. Something like that, maybe. See how we had a large candle and we didn't just take off like a rocket. We kind of retested and retested. Here we had a breakout, so there was really no retest. But here's a very large candle, and then we continue, and we did retest it. So we'll see where this goes. It really depends on the dollar. And in a few weeks, if Janet Yellen decides to actually raise the interest rates, this whole thing could be completely reversed. And I wanted to show GLD really quickly. You can see there's just an enormous gap here. So if somehow you were able to buy down here, good for you, but I will be looking to, you know, for a pullback basically. This is a weekly chart of gold. Basically, I think we're retesting levels from June of 2015 and from October of 2015. So we're back down to them. So this is an important level. I think it should hold. If it doesn't, we could completely reverse this entire breakout, basically. And this is our friend GDX, another example of just, this is a 11.24% in just one day, just flew off. You know, again, this is a volatile security, and you know, from all-time lows here to 52-week highs, over 100% move, and we didn't really correct to even, you know, 38% retracement. So I wonder about this very large move. Maybe we completely reverse it and retest it. Maybe the 20.89, maybe even $19 level. We'll see. Again, it all depends on the dollar. If the dollar rallies from here, then we could see a reversal for gold. This is USO, United States Oil Fund. Nothing really to write home about this weekend. This week rather. We basically continue high in this rising wedge kind of pattern. By the way, this is a weekly chart, and we're basically at resistance and possibly stalling here. So we had more or less 3 weeks kind of trading in the same area. But so far, I just don't see a lot of selling pressure just yet. Maybe we'll get something next week. For now, we're just sort of stalling this area. One more thing I wanted to add about oil. Maybe we have something similar that's happening here. Also, we stalled in this area for basically almost 3 months here before some major selling started to occur. So, you know, we could potentially do some along the same lines as back here in 2015. So we got some fireworks in the natural gas area. We had a breakout above this level here from April. Just an enormous kind of candles, good volume too. So looks like we are above at least this resistance level, and we're approaching this major resistance level in the $2.50. So here on this weekly chart, this is a spot price of natural gas. You can see it more clearly at $2.50. We're basically there where we touched at 245. So this area is being retested, and this is an important area because we see here going back to 2015 we had several touches in that area, and then finally a breakdown below it. So, and then another attempt to rally above it. So this looks like a strong attempt to recapture it, and if we get above it, then we could potentially, I'll probably be treating this as a bullish security from if we do break above this level. Here is UNG, also a weekly chart. You can see that, I mean, it's not an ideal security to analyze, but nevertheless it provides valuable insight. So we can see here a breakout above this level here, and the next level would be around a little bit over $9. So I was looking at some of the commodity related ETFs, and I found PowerShares Deutsche Bank Agricultural Fund. So this is a fund that holds futures of various soft agricultural commodities like sugar, cattle, wheat, soybeans, etc. So looks like it has been moving up. Looks like we had an all-time low here, and the reason why it's all-time low is because these are futures and there is slippage involved in this. But in general, it's not a bad fund, and it has a decent volume traded. So looks like we had a all-time low, then a lower low, and looks like now we're breaking out. So we had a breakout here and another breakout here. From a longer term perspective, the picture is also looking pretty good, I think. We had a breakout here, pullback, another breakout, and I think this week we had another breakout here. So it looks a little bit overbought by the short term, so possibly could get a pullback. It's an interesting looking chart. Certainly looks like it's bottoming out. You know, it could also be something like this. And then we're just gonna continue lower, but maybe we are bottoming out after all. Anyways, that's it for this week's recap. Thanks for watching. Please stay tuned on how to find us on the internet. Thanks a lot. Bye bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services that are now active. Please consider subscribing. You get 3 weeks free trial, and it's only $24.95 per month thereafter. You get access to my charts, exactly what I'm buying, exactly what I'm selling. I have an internal blog. Also, I have several videos that have to do with trading and various aspects of risk control, as well as just a psychology of trading. So please do consider signing up. The subscribers are getting really good results, I think, and I'm getting some very good feedback. I have a performance section here where I post the actual portfolio percentage change. The inception date was in 2015 October, so it's not a lot of history yet. And there's some backtesting results that I feature here as well. The blog, of course, is where you'll get this information, and there's a video section where I separate them out for easier access. Click on the social page, and here we have a link to public charts page where most of the charts that you're seeing in this video are going to appear. If you have Twitter, Facebook, YouTube, StockTwits accounts, you can find us there as well. If you subscribe to our mailing list, you'll get a special price for our trade alert services. That's it for watching. Thanks for watching, and have another great trading week. Bye bye.